Home price growth has continued to climb to a new record in July. Numbers are just in. July was the fourth consecutive month of record price appreciation, and it marked the highest annual rate of price growth since the index began in 1987. Absolutely nuts. The median existing home sales price in August of this year rose 14.9% from a year earlier to $356,700. That's right. There's a 15% increase in the median existing home sales price in America. Households that bought homes in May are spending almost 21% of their income on monthly mortgage payments, which is above the average rate for the past decade. And we've got a couple of charts here that we're going to show. The first is the July home price growth surges. This is a absolutely nuts chart. This chart is showing that the year-over-year change in July of 2021 was nearly 20% home prices up from the year before. Pretty nuts. The second one is while price growth varies, all metro areas are up double digits. So it doesn't matter where you live. If you live in a metro in the United States, home prices are up. In Phoenix, over 30% year over year. San Diego, over 25%. If you look at somewhere like Las Vegas or Miami, over 20%. And still even places like Washington, Minneapolis, and Chicago up over 10 or 15%. Absolutely nuts. And then if you look at this last chart that we have, the US home prices are 44% above their prior peak. And so when you look at this specifically, we had the prior peak during the housing crisis. Everyone thought, wow, this is super overvalued. We never should see these levels in home prices. But today, currently, we are 44% higher than we were right during that housing crisis. That is the US on a blended basis. In a place like Denver, the home prices are double what they were during the housing crisis. Dallas, Seattle, Portland, and Charlotte, all over 50% as well. And so, Bill, help us understand why exactly home prices are exploding like this. Like, it's actually a pretty complex situation in terms of why they're going up so much. But what's kind of your read on this?
Well, I think you have to get back to basics, right? So supply and demand, everybody knows about supply and demand. Let's look at demand for a second. You have a situation where COVID happened and literally the federal government came in and started buying mortgage-backed securities. If the federal government hadn't bought the mortgage-backed securities, you'd have a real problem because liquidity would dry up in the mortgage bond market. And the mortgage bond market is actually what creates a lot of liquidity in the mortgage industry. So you have this incredible fuel for demand, which is you have the federal government buying mortgage-backed securities, you have low interest rates, which were reduced even further in COVID. So on the demand side of things, you just have gasoline on the fire. And then on the supply side, you have the situation where COVID created, I would argue, potentially the biggest supply issue that the industry's ever seen in the form of, starting, stopping. You have the lumber prices going up and all this stuff. So if you look at the demand and you look at the supply, it's just creating an environment pump where, the prices just have gotten to unbelievable levels. Now, the interesting thing will be what happens in, as we get into 2022, halfway through, toward the end of 2022, will some capacity come back online so you're able to get that supply up? If you can get the supply back up, what can happen is you can start to see some moderating in the prices. But for now, those two things affecting the supply and demand, as I described, are just creating an environment where, good luck keeping it. It's like keeping a beach ball underwater.
Help us understand like the supply chain disruptions, right? In terms of, I think most people are like, oh, I know that there's low interest rates. I kind of sort of know that people are looking for homes. So the demand side, they can wrap their head around. But the supply chain, they don't see that every day, right? So like, what do you understand is going on there?
Well, it's in part caused by the demand side. So I don't want to say, oh, it's just all supply. It's also the fact, as I said, that the federal government, and most people don't talk about this. I think it will actually happen in future elections, but people don't talk about it right now. The federal government has essentially gone in and bought large portions of the mortgage bond market. That's a huge issue. So I don't want to dismiss that. In terms of the supply issues, when COVID happened, I think that naturally all the manufacturers, and you see this across every industry, right? You guys see it too, and I'm sure everybody sees it with food and whatnot. But everybody, forecasted, okay, we're gonna wind down, we're gonna tighten up our balance sheet, we're going to slow things down. And then all of a sudden, you started to see the federal government come into the mortgage bond market. You started to see liquidity stay there. I mean, there was a period of time where they didn't know what was going to happen with the mortgage bond market. And so, naturally these home builders were saying, whoa, I don't know if we should really be building this much. So then they had to all of a sudden restart the race, right? And this time you're restarting the race with lower interest rates. You had the federal government buying the mortgage-backed securities. And so it's just been a natural game of catch-up. And that's what it's been. I mean, it's been unbelievable. I think it's been the biggest supply shock that the industry's ever seen. And I know we're seeing that in other industries as well.
Yeah, what feels even worse is like when you get the home prices going up, some of that naturally was just going to happen by people wanting to move out of cities, move into suburban areas. You get the imbalance of supply demand. So forget all the monetary and fiscal policy stuff. Like there already was going to be higher price points just because of this. When you layer in the monetary and fiscal policy stuff, then all of a sudden it just explodes. I mean, 20% increase, right, in terms of home prices from July of last year to this year. Sure, you can say there's a base effect in terms of prices went down during the summer last year, whatever you want to say.
No, you take the liquidity out of the
nuts.
mortgage market, you'll see those prices go down rapidly.
Yeah. Why do you think the government buying the mortgage-backed securities is so concerning?
Because, I do think it is, but I'm not saying so much concerning as much as it's a reality now. I mean, the mortgage industry, has had third-party providers who provided liquidity, almost like a market maker type situation. But when the federal government, it's much like with interest rates and the government backstopping buying the government when the government buys treasury bonds, right? It just creates this confidence that people have to keep the liquidity going. And so if you feel that the government's always going to bail you out in the instance of mortgages, right? Are you going to be concerned about risk as much as you would if there wasn't the government there, right?
Yeah.
So if you take the risk off the table, then you're looking back at some pretty risky things that can happen.
What do you guys think? Actually, before you guys answer, real quick, we're at 3.2K likes right now. If you all get us to 4,000 likes, John will give away $1,000.
And I'll do
Fair?
I'll do 1,000 at 5,000.
Oh, there we go. He finally shows up.
Stipulation on.
Wow.
You
You
got
got
a stipulation too.
All right, so
Should I put out a tweet and get it to 5,000?
Let's see if we can get there. On the
can
count
get
of
it
three,
there.
I'm going to count to three. Press the like button. When we hit 4,000 likes, then John will go ahead and give away $1,000. 1, 2, 3. Press that thumbs up button so more people on YouTube see this content and they can learn alongside you. All right, what do you guys think about the increasing home prices?
Well, I'm shocked that it's lasted this long and this consistently across all parts of the country, right? So if you look at kind of the charts that we were showing earlier, it's not very, it's some cities, yeah, sure, 5-10% up. Some are 20%. Las Vegas, I saw, was up 22% last month. But it's just like Bill said, right? It's just the supply and demand. People are moving. There's not enough inventory in the market, and people are willing to pay much higher cost. And not only that, but there's investors that are going out and purchasing a lot of these properties
That's
too.
another big issue.
Right? Yeah. So like when you look at it from the context of just even literally a simple supply and demand, a lot more of it starts to make sense. But we're going to see how long it lasts for. I think people are getting worried that they're not going to be able to afford or be able to move or be able to purchase new homes already at some of the prices that we're seeing existing now. So we'll see. Like if this lasts for another 3, 4, 5 months, where prices continue to climb up over time, it's going to be a real issue.
Over time, obviously, the prices have increased. I saw a study that Bloomberg did the other day that basically was like, if you want to put that 20% down on the average home in America, it's going up and up and up, right? So now you have to save for 10 years. So the lower income people in America are actually getting hit harder than that. It's going to be harder to find home, and it's going to take longer to kind of get into a home, which can be seen as both an asset and a liability, right, as a standpoint. But just owning a home is very important, and unfortunately, it's going to take longer to do that.
Yeah. The other piece that becomes really interesting is when you layer on the increasing home prices, that means that everyone in a neighborhood, the value of their home is going up. If the value of their home is going up and we get the unrealized capital gains tax, now all of a sudden, I think that this is probably the key piece, are people going to be forced to sell their homes to pay the unrealized capital gains tax, right? If you think of the average American, majority of their net worth is in their home. So let's say that you own a $250,000 house and you've got a mortgage on it, you're paying off that mortgage, and you've got, let's say $50,000 of cash in your bank account, you got some stocks, whatever, but the home is the majority of your net worth. You don't have enough cash to pay if the home goes up 20%. But that you can't pay out of your bank account or whatever without putting yourself in a dire financial position to pay that tax. And so I don't think we're going to get in a world where we want people selling their homes to pay for a tax on an unrealized capital gains, which either means that there's got to be a carve out or they're going to have to say, look, this unrealized capital gains thing's nuts.
Yeah, I mean that's why it makes no sense, right?
It's not going to happen.
Yeah, it's
Do we think that we've got Craig Lazara, I think is the quote that we have here, who said, quote, the last several months have been extraordinary, not only in the level of price gains, but in the consistency of gains across the country. And then we've got Danielle Hale, who's a chief economist for Realtor.com, said demand remains quite high relative to just about any other period in history, which is what's driving higher than normal price increases. And so both of these folks seem to be highlighting demand or looking at things around the extraordinary length of this. But I think, again, I just go back to like, how much is just the dollar being devalued, right? It's just monetary and fiscal policy stuff playing out. Like, it feels like that's harder to point to. It's harder to grasp, like, hey, how is this working? And so it's easy to say, oh, demand's up, right?
Yeah.
Of course, prices go up. Or, oh, there's supply chain issues. Construction companies, one thing I heard was some construction companies were pausing new construction builds when lumber prices were exploding because they were saying to the, hey, I can't price your home because I literally don't know what the price of the goods is.
And that's true. But I think it's just a confluence of all these events, right? And to your point, yeah, you can sum it up to the dollar being down, for example. But that's where I'm getting at with the Fed buying these mortgage-backed securities is what are they buying it with? They're buying it with US dollars, right?
Yeah.
And so, you talk about M2 and the velocity of money, right? At what point does that all catch up? But I think they're probably going to taper the mortgage-backed security buying pretty soon. So it'll be interesting to see what happens.
What
in
do you
the
think will
mortgage
happen?
market. I think that they're going to probably reduce it because it's almost like emergency-like conditions. I mean, there was a real concern for a period of a few days in early 2020 that the mortgage bond market was going to blow up. And if it wasn't for this outside force, meaning the government coming in and doing it. So I think they'll probably lessen the amount of bonds that they're buying and, maybe you'll see an uptick in rates. But I still think because of all the issues we discussed, the confluence of things, it's still going to be a hot market.
I was looking at a chart a minute ago here from Charlie Bolello on Twitter.
Charlie kills
Charlie.
it.
Yeah, he's a
He
good
kills
follow.
it.
But so he was showing the median home prices in the U.S. over the last 10 years. In August 2011, the median home price was $220,000, and this August it's $391,000. So it's almost nearly doubled in the last decade. So super scary stuff there. But then when you also look at the median home price compared to someone's income, it's 5.8 times higher than their median household income now, the average home price, which is the highest it's ever been on record. 5.8 times someone's income, their house, the median house in the U.S.
That's nuts.
Yeah.
Hey guys, bang bang. Thanks so much for watching the Best Business Show today. And don't forget to check out our partner, SoFi. They make all this possible. They're a super app that lets you save, spend, borrow, earn, and invest all from one single platform. And if you go there today and you sign up for a SoFi Invest account, you can get between $5 and $1,000 for free from SoFi. Not everyone's obviously going to get $1,000, but everyone gets something. Don't say that I never did anything for you. Go check them out at SoFi.com/pomp. Download the app and go ahead and open an account. SoFi.com/pomp. And make sure you come back and watch more of the Best Business Show. We're going to build the biggest business show in the world, and we need your help.